Thanks, Gabriel and the team for inviting me here. I really like the size of this event. It's just so cozy, and I feel you can actually network efficiently. But yeah, let's get directly into it before I even start presenting. So I think the main reason that we saw, let's say, less of a dip in wind is just because the deployment time of the technology is a bit longer. So all of these were subsidized assets. They just happen to be constructed and take longer to connect to the grid. So nothing happened in terms of the investment decision or the financing. It's just that solar is usually a bit quicker, much more to the point. And what can stop it? I don't think something can stop it, but I just think that we have a ceiling based on the grid, and especially regulation and permitting. That's pretty much my opinion right now. So yeah, I will speak about more general stuff. So even before I go there, I want to just touch upon the fact that we are representatives of the Romanian and the Greek power systems here. And we face actually very remarkably similar challenges. It's the same problems that we have to solve. And this is about ensuring energy security, ensuring sustainability, and really making a dent in this energy transition, which is here, it's a fact. It's not, it will happen, it's happening. So what I would like to focus on today is mainly the synergies and where we can really share common practices and best practices in order to get there. So to start with, this picture, I love showing it because sometimes people don't realize the pace of change. And I would like to start with Romania, showing you how quickly the energy system is expected to change just by one single factor, the retirement of those old coal and lignite units. And let's not go very far. We have already experienced this in Greece. There have been a couple of lignite units operating in the country. And believe me, this is what everyone was showing before. The renewable growth that happened over the past 2 years could not be happening without all this opening space. Now, Romania may be a few years behind that, but look at the drop of this curve. It's happening, and it's going to happen really fast. So that's number one factor. And let's put them side by side. If you actually look at our projections as Aurora, and I never even said what we're doing, but we're doing energy market forecasting. We're the global leader on this. If we look at these growth patterns by 2030, what we can see is that Romania and Greece are definitely at the leading position of Southeastern Europe in terms of growth. So maybe Romania does start from a lower starting point, mainly because there are some years lost from 2017 to 2023, where Greece started actually accelerating the second wave faster. But it is expected to actually have about the same absolute growth with Greece in the next 6 years. So this is something important to keep in mind. Now, one very important factor that again is a continuation of the Greek example. As I mentioned, in Romania, we have been seeing a little bit of a longer stalling of renewable additions, and that's mainly because the CFD scheme was always in discussion but always delayed. While in Greece from 2020, 2019, we see auctions, maybe some are delayed, but by a few months or so, and therefore we did get almost 3 to 4 gigawatts of plants all these years. Now in Romania this hasn't happened, but now it will happen. Okay, it is delayed again since November that we got the final deadlines, which were not final. But the big story here is that even if a fraction of this materializes, it's already a very strong lever for getting these 8 gigawatts of additional renewable projects that I showed for the Romanian market. Now, what we can really add a lot of value to, and that's what I would like to focus more on this slide, is that subsidies are good, CFDs are good, but they're not going to get to the NECP targets and what we want. The governments are not willing to subsidize tens of gigawatts. They will kickstart the market, they will help the market, but they will not sustain it over the long run. Therefore, what matters the most is what is the economic potential of those countries. And we measure this by actually focusing on the merchant plants, those that can come to the market unsubsidized. And that's not easy. Because right now there's not a single unsubsidized project of decent scale in any Southeastern European market, not Greece, not Romania, but in general. Now, what I would like to show you here in a nutshell is if we compare the two countries and we see the bars in 2025 and 2040, there are 3 key data points. The gray one is the baseload price, the wholesale average market price, and then we saw the capture price of wind and capture price of solar. What do I mean by capture prices? Capture prices are the generation-weighted average prices, so the prices that a solar or a wind asset would get only for the hours that is actually generating, which is obviously lower than baseload because it doesn't operate when the peak prices are very high. Now, you can see that in 2025, these have, let's say, a small discount from baseload, but then this discount increases. What does that mean? It means that we have an increased risk of cannibalization of prices. So the more wind and solar you put in the system, the more this tends to cannibalize your own prices. But the other metric that I wanted to compare it to is the levelized cost of electricity. The levelized cost of electricity is the absolute, let's say, metric to understand how much it will cost you to produce your energy over the lifetime of a project. If you look at this and you compare it with the actual capture prices early on, you may see that there's a big gap. What does that mean? It means that the bigger the gap, the higher the profitability of the assets. Okay, we're still recovering from the energy crisis, so baseload prices are really high. But what we see is that project returns for wind and solar, especially those getting built in the next few years, can be in a well into the 2 digits of IRR returns, which is more than sufficient for investors and developers to go into building utility scale projects. Now, I would like to close with this, and I would like to stress out the opportunity that is in these two markets. Romania is already the biggest market in Southeastern Europe, but we expect it to continue being the largest, because with the electrification of heat, of transport, and the production of green hydrogen in the future, we will see large growth. And what I want to focus your attention with one number here is that by 2040, Greece and Romania together will have around 140 terawatt hours of demand. This is a big number. This is not negligible. And what that means is that these two countries can be at the forefront of all developments in Southeastern Europe. What will happen in Greece and Romania will shape the growth for the entire region, and therefore what, let's say, businesses and investments expertise have to offer in these two countries and the synergies between them will actually shape the entire region. So it's not just about the cooperation of Greece and Romania, it's about the cooperation of these two countries and these businesses in these countries to actually take over much wider parts of the pie in a Southeastern European level, not just these two countries. So that's something very important to note in terms of making, let's say, expansion a bit more wider. And yes, finally, one more very quick example, it's already mentioned, but a very simple thing is there are two, let's say, developments in Greece and Romania that are happening at the exact same time, and this is offshore wind. What a better example to actually see more and targeted, cooperation in this field. There are many struggles in the Greek one. I can guarantee you that there will not be 1.9 gigawatts of offshore wind in 2030 in Greece. This is impossible, and at the same time, we see that Romania is facing similar challenges with deploying, and even in 2035 is questionable. So this is one of the great examples where both politically, but also in terms of companies' expertise, can be used to get people on the same page. So as a summary, I would say there are a lot more common challenges than individual ones, and I think everyone agrees on this. The second one is that, the synergies can benefit everyone and can be scaled to bigger size, let's say, than Romania and Greece, but to the whole Southeastern European market. And finally, whenever there are investments and business expertise in those common challenges, they will be valued very highly in Southeastern Europe as a whole. That's all. It's more general, but I hope you found it useful. Thank you.
Thank you, Panos, for this excellent closing.